But you also, in the past week, published or wrote and published quite a detailed report on some Bitcoin miners. So I wanted to, I guess, pick a few things out of that report and discuss it. I think our readers and viewers will probably be interested in a few aspects of that. First question: why buy the miners instead of just the Bitcoin itself?
Yeah, so it's a good point to start with. The thing I would say is most investments in the cryptocurrency space are leveraged to the Bitcoin price first and foremost. So any asset generally that you buy in this space will go up if Bitcoin's going up and will go down if Bitcoin's going down, at least in the short term. That dynamic is pretty strong. But if you're constructing a portfolio of assets in this space over time, there are nuances between the asset classes that are important to realize. The most obvious would be that, certain altcoins are doing different things than Bitcoin. So even though they might correlate strongly to the Bitcoin price, at some point they might break off and start a trend of their own. So that's one example. With Bitcoin miners are a crucial part of the Bitcoin ecosystem. They secure the network essentially. And in return for that, they get newly mined Bitcoin paid out every roughly 10 minutes, every block. And they also get a share in any fees generated on the network, which aren't that high at the moment, but that's the model is you get some new Bitcoin, plus you get a share in the fees. Now, obviously, the dynamic there says, well, if Bitcoin price is going up and they're getting a share of Bitcoin, then the higher the Bitcoin price, the more the revenue. And that's true to a certain extent as an individual miner. But what Bitcoin miners do, which is a little bit different, is they've got avenues to create revenue. So in the report, we talked about one avenue, which is some of these Bitcoin miners, which run these huge data centers, especially these North American miners, they rent out their mining power to external parties. So they could be investors looking to buy into Bitcoin in a novel way, or they could be projects, not Bitcoin, but other cryptocurrency projects that require access to that proof of work mining power. So there's other blockchains that use the same mining consensus mechanism called proof of work. So what these Bitcoin mining companies do is they can generate their own Bitcoin. They can also rent out their facilities to people that need that grunt power, that computing power, and that can give them a cash flow hedge essentially. So you don't get that buying Bitcoin yourself. Whereas as a Bitcoin miner, they can rent out their facilities, generate cash flow. So if the Bitcoin price is going down, then they're still generating a cash flow from an agreed contract to a third party. So they've got that on their side as well. The other thing that Bitcoin miners are interesting to me is they're leveraged to the innovation side of Bitcoin. And that has a lot to do with the energy industry. And we talk about that quite a bit in the report as well, how there's a lot of innovation happening in energy where either stranded assets that are not commercially viable because they're not close enough to a population center, something like hydropower, for example. Hydropower can make very cheap electricity, but unless it's close to a population center, you can't really use it. Whereas Bitcoin mining companies are situating data centers close, or Bitcoin mining rigs close to these hydropower sources and generating Bitcoin from them. They don't need to be next to the population center to do that. So that's a clean, green sort of innovation that is investing in the renewable industry. Even with the oil and gas industry, there's innovation in, what they call gas flare-offs, which is like, an excess gas is created in the process of finding gas products. Usually that's just burned off and goes into the atmosphere as carbon dioxide or other noxious gases. What they're finding is that there's companies, and I actually saw there's two Australians who are quite big in this, ex-Macquarie bankers who are making great strides on this. They're allowing these gas producers to use that excess gas energy to mine Bitcoin instead of just having it as a waste product. So not only does that create less waste, because that process of converting that into electricity actually is useful and creates less wasteful gases than just burning it, but it creates another profit center for oil and gas companies. And Bitcoin miners are leveraged to that exciting sort of innovative development in energy policy. So the way I look at Bitcoin miners as an investment, as part of my overall, cryptocurrency or digital asset portfolio is, they're leveraged to the Bitcoin price. but they also have a few different strings to the bow that make them a decent hedge on the downside, and also expose them to this energy innovation industry that's, we're at the early days of that, but that could be a really high growth industry. And the last point I would say is, I only came across this after I released the monthly report, is I saw an interview with Dr. Adam Back, who's one of the sort of, original gangsters of Bitcoin, exchanged emails with Satoshis, was involved in Hashcash in the 90s and all this other stuff. And they've been running mining rigs since the early days. And what they noticed in like the bear market of 2020, when there was a big flash crash down to about $3,500 US, is they were mining at the time. And obviously you would think that they would be less profitable as the Bitcoin price collapsed at the time, from 10 grand down to 3,500. But what they noticed was that a lot of other miners came offline because they weren't profitable. So they stopped mining because the electricity cost was just too much for them. So these other competitors stopped mining, but Blockstream, which is the company Adam Back works with, they kept on mining. And so what happened there is they got a higher percentage of the new Bitcoin mined. And they found that even though getting less price, because they were mining a lot more Bitcoins, they actually made a 25% gain over that time period when the Bitcoin price fell. So there's another interesting dynamic there, which says, potentially well-resourced Bitcoin miners can even make money in a Bitcoin bear market. Obviously, that depends on what other actors in the space do. But I think given all those factors, I think it makes a super interesting, different way to play the Bitcoin bet. I still obviously recommend you have your own Bitcoin, but this could be an interesting way of playing it with different revenue drivers over time.
So a few questions come to mind there. The analogy I'm looking at is obviously with gold miners, and obviously the thing with gold miners is you want to keep your costs low. So the lower your costs, or the lower you are on the cost curve, the more you can handle price bear markets, retreats, all that sort of stuff. And when everyone else is falling out of the production because their costs are up here, you're still doing quite well. Just when you were talking about the energy revolution and being able to tap into different forms of energy, that's all about reducing the miner's cost base, right? So it sort of increases their margin. Do you have a handle on where the cost base is for Bitcoin miners right now, and what margin they might be operating at?
I've not looked at it for a while. The last time I looked, I saw an average of about 7,500 roughly as an average, with people north and south of that, which is a long way from the current price. But that's hard to estimate, because you've got to remember, this is a perfect, a system of perfect competition. Anyone in theory can become a Bitcoin miner. There's no barriers to entry as such. So if someone in Siberia wants to set up a Bitcoin miner rig, they can go and do it. No one can stop them, and they can tap into that network. So there's people coming on and off all the time. So you're right in saying that the drive to the renewable side is one. In America, for example, there is a political push to green energy, especially with the Biden administration right now. So there's that. But also, a lot of renewable sources are actually really cheap. A lot of the cost comes from making sure it's commercially viable to the population centers they're trying to service.
And integrating with the grids and all that sort of stuff. Yeah.
Yeah, exactly. Yeah. So it's all that infrastructure that costs billions and billions of dollars. And give you an interesting example. In El Salvador at the moment, they're looking to tap into the nation's volcanoes to mine Bitcoin. Now, for them, that's almost like
innovative.
But it's free energy. Geothermal is almost free energy. So all they would have to theoretically do is build a data center within proximity to geothermal vents where they can tap into the energy. And that's proven technology. That's not novel technology. So
sure.
So instead of having to move a community next to the volcano, which is a bit more dangerous and expensive, they can create mining rigs using almost free energy, and then use the proceeds of that Bitcoin to support their economy. So that's a pretty interesting model that was never possible before. You couldn't convert the energy to convert it directly almost into money in any other system. Oil would probably be the closest, and that was only if you had oil. So if you think about volcanoes, hydropower, solar power, even conceivably, they're almost free sources of energy that are sometimes not economic yet because of all the ancillary costs of making them, reliable for a community to use as well. Which, sometimes they've not got base load power and stuff like that. But as a way of using excess energy or even just tapping into free energy to mine Bitcoin, it makes perfect sense. And the knock-on effect of that, in my thinking, is you're progressing that technology further because you're getting investment into do it. There's incentivized investment to make, more efficient solar panel systems, hydrogen systems, hydropower, all that stuff. People are incentivized in this. It's like an arms race, Bitcoin mining, where, like you said before, the lower your cost base, the more you can survive the volatility in price. You know what I mean?
So the closer you get to that source of energy, the cheaper your cost base is going to be.
Exactly, which means you can ride the ups and downs better than your competitors and make more profit in the good times, and also potentially either make less losses or increase your share of Bitcoin in the bad times, which can help offset losses. Because that's the one thing you don't get as a gold miner. You can be low on the cost curve, but just because other gold miners aren't selling gold doesn't mean you're getting more gold. But with Bitcoin, you actually do. If other miners drop out the race, you actually start getting access to more Bitcoin. So you've got
there's no physical mine site, so to speak.
Correct. Yeah, it's all in the digital realm. So yeah, it's a really part of the reason I wanted to write this report as well and recommend it is I think it's just a really interesting new economic model to get stuck into. And I ended up writing, I think it was 4,500 words on it, and I probably still didn't dive too deep into it. And I was just trying to give as big a broader picture as possible, so that people could then hopefully follow the story as we go. Because I think we'll get a lot of developments in this over the next year. And one of the big developments, which I led off with, was the fact that you had all this Chinese miners leaving the system, which was something that had been threatened for years. But it actually happened this time, and we could verify that it happened by looking at the drop in the hash rate, which measures the security of the network. And a lot of people had, things like, China controls Bitcoin, or if China drops out of Bitcoin mining, then it won't be secure. Or China's dirty coal gas things are bad. We had all these, these arguments from people that hate Bitcoin all the time. And when it happened, none of it turned out to be true. China left the market. That's fine. Bitcoin kept on going. Other countries and other companies picked up the slack, and the hash rate, even though it dropped initially, has started to recover again. And the push to green renewable stuff, now that Bitcoin mining has moved to places like North America, who are taking advantage of it, is actually ramped up a notch.
So that's the point, isn't it? I mean, the up until just a few months ago, Bitcoin mining was dominant in China, and this and we won't get into the reasons why China has got out of it in this chat. Because that's another conversation itself entirely, but it has opened up this opportunity to buy into these North American miners. So perhaps you could just reiterate where these guys that we've recommended are located in terms of the energy sources in the US.
I'm trying to remember off the back of my head.
I know one of them was in Texas, which is obviously a very energy rich area, and they're probably tapping into those innovative sources of energy that you just mentioned with the gas flares and stuff like that.
So Texas is interesting because it's got a very crypto-friendly political environment there. Texas and Wyoming in America are really friendly politically. So they've obviously got their federal system, but they've got pretty powerful state systems as well that can levy taxes and other stuff on companies that operate there. And Wyoming and Texas have taken the lead and are given big incentives, just in the way of, tax breaks and other stuff to Bitcoin miners. Texas actually, I think, and I could be wrong on this, but I'm pretty sure I'm right, has more wind power in its system now than coal power. And that's a big change over the last 10 years. So Texas, which just goes to show you the advance of renewables as an economic basis, because I can't imagine Texas is too much of a greenie hub. So it's probably a purely economically rational decision for them. So they've got a lot of wind power. So in America, the Bitcoin miners do have to have one eye on the green stuff, because if they don't, then the threat of legislation from the federal government can be greater. So what a lot of them are doing is they are locating in cheap places, like politically friendly places, but also green if possible. If not possible, they buy stuff like carbon credits to offset it, just to make sure they're not pissing anyone off in Washington. But
there's much less risk of getting the boot from these jurisdictions than, say, in China, when the US finally get around to designing their own central bank digital currency.
Yeah, exactly. Well, the thing, look, the Chinese people, as far as I've ever met, are very entrepreneurial people, which is a shame because usually the government ends up stopping their entrepreneurial spirit. And they're smart, though. They usually find ways to work around, and that's what they've been doing for years. It just looks like finally the government just completely cracked down on it. And you actually saw some Chinese companies try to move to other jurisdictions and keep some control, whether that was Russia across the border or Mongolia or some other places. Some even moved to the US. You got some Chinese companies moved to the US. One Chinese company, the name escapes me right now, but they're a big producer of Bitcoin mining rigs still. So they've still got their eye in the game that way. And I think at some stage you'll see China come back into it. I think right now, and again, we didn't want to go into this, but I think the reason China sort of, or one of the reasons they got rid of the miners in their country is because they want to push this digital yuan, the digital central bank digital currency. And I think at this stage, they just thought, well, it's a little bit of a threat, so let's just kill it. It's short-sighted and it's not going to work out well. And I think when that plan fails, because I don't think other countries will trust the digital yuan, that's my opinion. And I think at one stage, China will come back into the Bitcoin mining race. But by that time, the mining infrastructure will be so distributed globally that it won't matter. They might have a share, they might pick up 10% or 15%. North America might have 16, 17, 18% or more. But then you've got Iceland because of its cheap energy, geothermal energy. You've got Siberia because it's really cold, which makes it cheap to keep the data centers cool. Australia could even have a hand in it. I mean, think of the abundance of solar we've got in the outback and things like that. I mean, I'm sure, I think, can't remember the bloke's name, but he's building a massive solar plant in the north of Australia, like a huge thing. And the idea was to export energy to Southeast Asia with an underground cable.
The only downside of that is I'd imagine the data centers might get a tad warm up in the.
I was thinking somewhere like Cooper Pedy, maybe you could put them underground or something. I don't know.
They'd have to go down deep.
I'm no expert at that, but if you think about the process, if the energy is free and the solar things are capable, and you can keep cool underground, which I'm sure the residents of Cooper Pedy have worked out how to do, then.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.